Good afternoon. It's December the 20th, 2017. Time to wrap up today and take a look at tomorrow. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, the tax bill has passed. The Emini sold yesterday and sold once again today. An hour ago we were guessing we might close at 85. So the tax bill that everybody has been waiting for is finally taxed. Why is the market down? Rumor fact trading would certainly be the impetus that got it started. And then I think seasonals, where we can see the market sell into Christmas and then have it rally from the 26th through the 30th to close it on new highs for the end of the year. We'll see if this actually holds up. I still think we're going to go see 2,700 in the E-mini and 25K in the Dow. They're just too close not to be there. Okay, fat bar trade. No other setup was right there. Brought us into here. We tried to trade here for a scratch. Didn't go anywhere. Leaned long. Head and shoulders pattern. We were still in this trade. We didn't come out to here, so we missed the sell setup. That was this was the trade of the day that we had a chance to get in on. And the market's basically just been sideways ever since. Just not a lot going on. I mean, there's a point there for you, more than a few times. So again, lack of volatility really decreases the opportunities for somebody who's trying to day trade. We need volatility to prosper. Lower high, lower low. F1 says find a place to sell it. F2, we're dealing with another B. So you have to think that maybe 75 is the next stop. 20-point pullbacks in this up market, they're there. And we get every third or fourth day a day of selling. So we had selling yesterday. Sometimes that selling goes 2 days, rarely 3. So tomorrow, market might be looking up. We've got news tomorrow. The GDP news is old news, but it's probably going to be revised higher. So they're guessing 3.3, the deflator 2.1. Jobless claims 240, that's kind of the default number. It's been coming in lower than that. Of late, Philly Fed 21.8 could come in higher. Chicago Fed National Activity Index plus 0.2, that's where it was last month. Corporate profits, don't know. FHFA plus 0.4, probably got a chance to come in higher. LAI plus 0.3. No one pays any attention to that anymore. The nat gas inventories last week it drew 69B. This week was kind of warm, so I don't think we'll have a draw of 69B. So what's the focus? The GDP, the upward revision in the GDP, Philly Fed, and I think those two will take the market's focus. So if the market were to close right now, right here, we're trying to sell 87s to 89s and 94s to 96s. On the buy side, we're buying 79 to 81 and 74 to 76. Treasuries got smacked again today. They look like they're headed lower. why the economy is growing stronger, perhaps, than forecast. Trump's tax package will certainly increase growth next year. Fed can raise interest rates sooner rather than later, and the Fed's will increase its liquidation of its balance sheet from $10 billion a month to $20 billion per month. So nothing fundamentally is pointing to higher prices as far as treasuries are concerned. Good news for savers. If interest rates are going up, maybe those that save money and do the rest of it will finally get paid. None of those people were able to do the carry trade. We got a retest of 13.5. Market's come back up. The close was 14.5, the unofficial close, so we'll be close to that. So you can see early selling, rally back, tax bill passes, come back down. And you'll see that even better on this depiction. Definitely dealing with a B. And you can see that we got a very clean break in the market up here at 20. So if you had your druthers, you'd be selling 19s to 23, somewhere up in here. The issue is, will we be able to get in above that last rotate up? Stopped at 17.5, so we'll make 16 to 20, sell 1. Give it a little bit of room, 23, 27, sell 2. On the buy side, I mean, the low is 13.5, so 9 to 13, buy 1. Let them go a little bit lower. I think we will see that in London anyway. And then 1 to 5 for buy 2. Like the short side of the market, once again, like we did this morning. Okay, the bond market, they don't change their minds as quickly as the other markets do, because they advertise themselves as economic fundamentalists, and when they put on trades, they plan on holding them. So you can, we started a new distribution lower yesterday, but selling continued today. The option expiration is being torn all apart right now. So you'd have to guess 150 puts and maybe 151 calls will be the play tomorrow. Everything is pointed lower. Last rotate up stopped at 25, so 20 to 24 is number 1. Sell 27 to 31 and 3 to 7 for number 2. On the buy side, we'll make 8 to 12 number 1. 1 to 5 buy 1, 25 to 29 buy 2. Okay, looking at gold. Gold's kind of interesting in here. It's hanging in there pretty well. Higher low, higher high on F1. Find a place to buy it. Got that selling that started up at 1278. Today's profile. Leans P. Rejected prices above 1270. Rejected prices below 1266. So here we are at 68. Just kind of right in the middle, trying to trade higher. So 69 to 71, sell 1. 74, 76, sell 2. 65, 67 by 1, 60, 62 by 2. So I think we have a shot for stops below 1200, but gold doesn't move usually as quickly as the other markets when we make these calls. Sometimes it takes 3 or 4 weeks. Interest rates going up. Fundamentally, there's not a strong reason to be a holder of gold. Economic chaos, etc. Bitcoin, rest of it might increase the argument. Okay, crude oil, we guessed this afternoon that would close up rather than down. A lot of it had to do with the EIA report, so higher low, higher high on the F1, find a place to buy it. We've got our usual wrap and D period on news days, and start a new distribution up in E period, and we closed above 58, so 58 and a quarter, 58.50, sell 1, 75 to the buck, sell 2, 57.50, 57.75 buy 1, 57 even, 57 and a quarter by 2. Okay, the cash side of the market winds down really fast into Christmas, so I'm gonna expect or anticipate lower volumes tomorrow and then again on Friday. We'll see if that happens. And the euro, no reason not to think it's going to 120. I mean, we're close enough to it. We didn't get there today. High volume number, most recent in the market's memories at 1985, and stops above 120. Again, I don't see a lot of fundamental reasons propelling the euro higher. Higher interest rates in the United States has supported the dollar previously. There's a couple of stories out there that China has begun to war openly against the US dollar, taking it down. I mean, who knows? We'll find out. We always find out after the fact. So 1975, sell 1 where we were today. 120, sell 2. Buy side, the breakout came from 35, so 40 to 50 buy 1, 20 to 30 buy 2. Still think that 1999's probably the best trade on paper that we have working or potentially working for us right now. And that's it for this December the 20th, 2017. I will see you bright and early in the morning. You all have a great evening. I'm out of here.